Hi. Hi, guys.
Good afternoon, Tosin. How are you?
Very well, Justin. How's it going?
Good. Welcome to both of you and to all of our attendees listening for this fireside chat with two fintech endeavor entrepreneurs. The title of this fireside chat is A Vision for Financial Freedom for Emerging and Frontier Markets. And I'm quite excited to have both of you guys because I think and we'll get into it. Pedro, your experience in Brazil and the financial inclusion story of Brazil is one that I think is quite interesting in the Nigerian context as well. And there's a lot of parallels between the development of Brazil and the current development story that Nigeria is undergoing. So we'll get into that in just a moment. But just to introduce both of you again, Pedro is the co-founder and CEO of Banca Neon in Brazil. And Tosin is the co-founder and CEO of TeamApt, the parent company to MoneyPoint and Monify payment gateway. So Pedro, I'd like to get into it just to start with you. Assuming that there's a number of our listeners, the majority of our listeners rather, are Nigerian or sort of in the African context, I'd love for you to just provide a little bit of a lay of the land of Brazil at present from a financial inclusion perspective, from a smartphone penetration and digital banking trust perspective. I also know, branchless banking is a very big thing in Brazil, and there's been regulation for about 20 years now around that. So can you just give us a little bit of the lay of the land in Brazil before we move over to Nigeria?
Sure. First of all, thank you very much for the invitation. It's a pleasure to be here. Let me tell you a little bit about Brazil. We are in a really concentrated market where 5 big banks, they hold like 80% of all deposits, 80% of all credit portfolio in the country. The market, like those big banks, they are a consequence of several acquisitions and M&As through the last 100 years, maybe. They've been acquiring everyone that pop up in the market, so that's why the market is so concentrated. We have like 200 million people in the country, right? It's a strong economy where a lot of people don't know, but we have one of the most developed central banks in the world. The financial industry is super well established. And the central bank realized that concentration was not good for consumers and for the companies. So they have decided like 6 years ago to start to issue new regulations that would allow more competition, like tech companies, to get into this market without being needed to be like super asset heavy as having branches all over the country, or the way they could operate doesn't require a lot of minimum capital. And that's then so 6 years ago, it's exactly when the story of the fintech started in Brazil. Neon was the first digital bank. At the time, I was 23 years old when I founded the company. I had no idea about what I was going to do, but I was sure that people, like average people in Brazil, they needed a better solution, cheaper, better, and different from the status quo at that time. And so we were the first one, but after us, a lot of fintechs started to pop up in the market because the central bank allowed this to happen by having more lighter license that allowed fintechs to exist.
Mm-hmm. Yeah, and I know that digital banking has really taken off in Brazil, and maybe we can just start by juxtaposing that to the status quo in Nigeria. And Tosin, I know you guys are doing massive volumes in the agency banking world with cash in, cash out, and Nigeria today is still largely analog. So can you just talk a little bit about the status quo in Nigeria in which you operate, and perhaps a little bit, from a regulatory perspective as well, of where you fit into all of that, and how all of that has to do with financial inclusion for Nigerian consumers across the country?
Yeah, thanks, Justin. In many ways, Nigeria is some is many years behind Brazil. So I would imagine it's like that kind of 6 years behind Brazil. And there's always a natural progression of things from cash to digital. So what you have right now, I mean, Nigeria prior to now was more or less transactions just being done heavily in cash. Now digital transactions are winning, more or less. Major digital transactions, for example, P2P transactions is, transfers are ubiquitous. P2P transfers are ubiquitous. That's one of the reasons why Monify is what Monify is today. Merchant payments are ubiquitous. And as a matter of fact, you should even see agents as merchants. So what's actually happening right now is certain micro payments can't easily be done with digital payments, pure digital payments. So ideally, every merchant, every mom and pop store should have a point of sale device if you want to buy something, right? But that's not yet the case. So what you now have like cash hubs around where people go to these agents who are actually merchants selling cash, get cash and go spend at this merchant location, which is like an intermediate position to full digitalization. A full digitalization scenario will be where a pure cash position is where money is collected in cash, like salaries are earned in cash, and you spend all the cash throughout. A pure digital perspective is where money is collected digitally. There's no cash intermediary, and you spend all the money digitally. Nigeria is in between now, where money is mostly earned digitally. You withdraw some portion in cash, and you spend that portion in cash. So there's a general that we should expect transitions from cash in, cash out more to merchant payments in the future, which of course it's literally the same solution we're prepared for. And that's more or less on the acquiring side, the merchant side. On the consumer side, which is the traditional banks have actually done some really good job so far. However, they suffer they have two big problems. The first problem is distribution. The second problem is credit. Those are the opportunities in the country. Now, the distribution problem is in the fact that half of Nigerians still are unbanked. And the top reason one of the top reasons for them being unbanked is forms of institutional exclusion and banks being far away, banks being the physical banks, being far away from where they live or work. So the demographics of these customers are customers that would generally prefer to have some form of face-to-face relationship with whoever they're going to bank with, which used to be what bank branches are, and will not make decisions online. They will not yet use a pure digital bank. But the current scenario, because there are no bank branches around them, they rather not open a bank because they don't want the money in the air. And that's the bottom of the pyramid, right? And for the bank's population, like the middle of the pyramid, they are still mostly excluded on credit. They only have a few options. The first option the major option that has come up recently are the credit-led neobanks, which basically allow everybody to suffer for the losses that they have in not having enough data to appraise you, or which leads to high interest rates. So the opportunity there is to simply build a better product that will allow people to have access to resilience functions, savings, and as well as products for the middle class, and distribute it very well, which is some of the major things that we're currently working on. I think there's a powerful proposition in being able to serve consumers on both sides, on both the merchant side, which is agent or merchant side, as well as the consumer side of things, which is on regulation. Regulation. We're working with the regulation to ensure that they understand what we're all building very well. I think one of the primary responsibilities of regulators is to ensure stability, ensure prudence, and fintech, by their very nature, many years ago, one of the buzzwords was disruption. a regulator does not want to be disrupted and should not be disrupted. It's your job is to provide order. So I think I would imagine that the regulators want to ensure that they understand what we're doing. And I believe we personally are doing a good, are eager to ensure that regulators have visibility into our plan, because it's all in the interest of the global interest of the economy to ensure it's growing. We've also seen that beyond Nigeria, it's a similar story in other economies. Egypt is many years, is also some years behind Nigeria, especially in instant payments. And we should also expect similar paths for some of these giant economies.
Yeah, definitely. And one of the things that I want to go a little bit deeper on that you mentioned was, accessibility. And it's something that we talk a lot about, not just from a distribution perspective, but from a pricing perspective. And so, Pedro, I'd have to imagine that a big value proposition for your bank is zero fees. And looking at the sort of rate card, it looks like zero fees for everything except cash withdrawals. So can you just say a little bit about that? Like, how important, especially in the context of financial inclusion and especially in the context of servicing, a mass market Brazilian consumer, how important is that fee piece relative to perhaps all of the other levers of accessibility that Tosin just mentioned?
Okay, great. So this is a funny story. I started the bank because again, when I was 23, I used to have a bank account at one of the incumbents, and I used at the time I used my debit card, and I started to use my overdraft by R1, and they charged me 46 reais of fee plus 18% a month. I was like, oh my God, what is happening here? And then I stopped to understand that the average Brazilian worker usually pays one minimum salary, one monthly salary a year in banking fees. This is still the same today in Brazil for the incumbent banks. So at that time, I realized that, hey, it's impossible to that. It must be a way that your cost of service is so low that you don't need to charge a lot of fees. And so we were the first bank also to launch no fee, no monthly fees, no transactional fees for our clients. At the beginning, we used to charge for ATM withdrawal, but now we give 3 for free a month. That it's like more than enough for. So our users, they pay no fees. So on the other hand, we have to be real efficient, and our cost of service need to be like 10 times lower than any other incumbent bank. And that's exactly what we do. We have the lowest cost of serving a client around the country. But this is a everyday, this is something that every day you need to think about. Because usually we're thinking about, sometimes we're thinking about a new product and we say, hey, but this would increase the cost of service. Say, hey, no way, we cannot do this. Because even between all the digital banks here in Brazil, we are the only ones with the biggest focus on the low income population. And those every time I hire someone from a big bank, they say, hey, we need to get the best client. And I say, hey, if we do this, we will be exactly the same in the incumbent banks. No, we need to be to have a product that is so easy, so smooth to use, that any client will become a profitable client. And that's exactly what we did. So the way that our business model works without charging any fees is that only with the debit interchange and the floating of the digital account, the checkings account product, the digital account product is slightly positive. It's not really, the economics is not that good. It's slightly positive. But anything I sell on top of the digital account, like a credit card, personal loan, payroll loan, investments, insurance, like POS terminals, anything, it's pure margin, because I have already paid for my cost of acquisition, and without fees, it's a solid like a sustainable growth, right? Mm-hmm. It's really important for the clients that we charge no fees. I mean, those clients, they don't have a lot of money. They are some of them, we're helping them to save money for the first time in their life. So you cannot hey, save R1 per day, like $30 a month. but give me this $30 because I need to pay for your costs here. So this is one of the most important, part of the offering, right? But it's not only the fees; it's the user experience as well, the customer service, the way we develop our underwriting model. We're giving credit cards. 2/3 of our clients, they never had a credit card before, because we are using different data that the traditional banks used to use to underwrite credit for them, start a relationship with small limits, increase over time, but we're giving access to financial products to this segment.
Mm-hmm. So just a quick follow-up for you, because I know in the Nigerian context, a big contributor to the cost of doing business is cash in, cash out, right? So how do your customers, especially at the lower segment, fund their accounts? I saw that there were some sort of physical cash in ways that they could do that. And then also on the spending side, what are you seeing in terms of spending? Has merchant payments or acceptance of credit cards increased to such an extent, for example, in Brazil, that there's less of a compulsion to cash out and carry cash than there currently is in Nigeria?
Sure. So, like, the country in the last 6 years changed dramatically the way they transact, right? 6 years ago, around 50% of all transactions were cash, doing cash. Today, I think probably around 30%. But anywhere except credit card here. Like, if you go, but there's one thing that changed. POS penetration increased a lot. Not anywhere, but like the majority of the place all over the country accept a credit card. But since a year ago, Brazil now has launched the instant payment solution, where with a QR code you can pay anywhere. So imagine you're like in the middle of jungle, the guy that will sell you a bottom water, they have a QR code. So the instant payment replaced cash and is starting to replace card transactions as well, especially debit, right? Mm-hmm. So this was one of the big achievements for the central bank last year, launched the instant payment solution that is like free of charge, real time, 24/7, like really efficient system. There's another regulation now in place that is open banking, where we can have, is even more broader than the open banking in the UK, where you can have access to people's financial information, products, investments, everything. And this is helping people that, because one of the hardest thing to underwrite credit for this specific segment is lack of information, right? They are not sophisticated. Sometimes they had one or two credit lines in their life, sometimes none. So once you have information about their income over the last 12 months, for example, it's much easier and more accurate to give them credit with a better interest rate. So this will help the country to decrease interest rates.
Mm-hmm. Yeah, and Tosin, I'd love to get your perspective on that. I know you and I in the past have talked a little bit about this in terms of how Nigeria moves to a more digital economy, and there are some pieces in place like instant payments, but cash is still really prevalent. Yeah. And the reason why is fees and accessibility and the lack of infrastructure, stable infrastructure from a point of sale perspective, and all things that I know that you're working on. And I'm particularly interested to get your perspective in the context of Monify, where I know you are thinking about in the future, when things go more digital, the role of agents may decrease. And so how can you sort of disrupt yourself and build other digital financial services to service the customers that your agents are serving? So what's your perspective on all of that? And perhaps in the context of Brazil's journey as well?
Yeah, I think Brazil has always been a form of glimpse into what the future might look like. Some things are quite anachronistic. In Brazil, for example, Nigeria has had instant payments a long time ago. like many, many years. So I believe one of the major drivers of take-up of Pix in Brazil is P2P transfers, right? Which is also usable in P2 merchant scenarios, right? This has been ubiquitous in Nigeria. So a new solution that the central bank launches in Brazil that now suddenly allows money to be received in real time, which was not really the case before, was just maybe point of sale payments at merchant locations, is a major game changer. But that's already exists in Nigeria. P2P is like very ubiquitous. We transfer money every day, every time. Even at agent locations today, people do payments to transfers. However, one difference, and it's not a case of adoption, is the form factor of QR codes actually improves the user experience of P2P payments because it's actually simple than cards, simpler than cards because it's on your mobile. If you have a smartphone, it's on your mobile. There's no hardware, setup hardware costs again. So it means it goes really fast. The challenge in Nigeria is habits. So it doesn't look like the need is huge to push it because Nigeria has a QR code now, actually. NIBS has QR code, but the traction is not high. That's the reason. The reason is because it's no longer, it's not a pain point. Brazil had a pain point. It's not a pain point. It's better, but better things don't usually, like, traction usually comes from really from pains. You know, it's not vitamins. You need it. Vitamins don't sell. Like, it's more or less like you actually have to have a pain. So the use case for where I'm going is, for a long time, Nigeria will likely be a card market, after which QR codes will come in, because instant payments is already a thing and very ubiquitous. And what we should look at, a similar case would be maybe the case of the US or the UK. So in the UK already has instant payments, UK has advanced cards. A QR code solution will be a hard sell. In the same thing in the US. The difference is that in Brazil never had an instant, but Nigeria has. So Nigeria would tend more towards UK and US than Brazil, which means that the agents that you have today that use point of sales to withdraw cash will only be simply just become merchants. So the behavior will likely just be more merchant acceptance than a disruption of cards towards QR codes. That's likely what's going to be, because people, I want to pay, I need a card. I can also transfer at the same time. QR code is something that they need to learn all over again. So that's and like I mentioned, that's what I started the conversation with. Fortunately, it's something we're aligned on. It's natural, because what's going to accelerate this is going to be the acceptance of payments at micro merchant applications. And to do that is to simply make it more convenient for customers to accept, to pay with cards, to pay with electronically, and than to pay with cash. And ultimately, it's always a question of convenience and cost. If the costs are not too high today, and the costs are often, sometimes are usually passed to the merchants in this scenario. Nigeria, for example, has some of the lowest take rates. The effective take rate in Nigeria right now is like 0.29%. Yeah, it's that low. That's the effective take rate in Nigeria. And for Nigerian,
impossible to make money with cards.
Yeah, exactly. So you need sheer scale. You need sheer scale to get to certain volume. So it's no longer really a question of cost. Now it's now a question of convenience for most people. And convenience is really, like, you literally have to have a big solution that is really better. So right now, for many people, just withdrawing cash at an agent location and keeping it in their pockets to spend at micro merchants behaviors is still, it's quite convenient. And it's similar to many European countries also. Like in Italy, you will still go to the typical coffee shop where it's cash that they accepted it. So what we should imagine Nigeria looking like is going to evolve more like Europe, right? That's how Nigeria was going to evolve. And preparation on our own side is to simply enable our solution, which works very well in merchant scenarios, to work well in merchant scenarios also. And for example, one of my major competition on OPay, if you go to OPay's website, you're not going to see anything called an agent. They are just called merchants right now, because in reality, agents are merchants, but selling cash.
Yeah. So do you have an expectation though, if the payments pain point isn't really there in Nigeria, are other financial services, Pedro talked about credit and lending, are there going to be other offerings that are going to move the needle towards digitization more, because in an analog and offline world, those services just aren't available to these customers in question?
Yeah. So I think Nigeria is already digitizing fast, to be honest. Month on month, year on year growths, I'm not very sure, but I think they're in excess of 30 to 40% on digital payments. This year has been the highest yet ever for card payments, right? So Nigeria is actually like literally digital. So there's a small portion that's cash, and that portion is what agents are filling in now. The behavior before in Nigeria was you have to keep a lot of cash, or you go to an ATM or go to bank and withdraw heavy cash that you spend over a week or 2 or 3 weeks. That amount period is dropping down now to a few days, and people keep their money digitally, but withdraw in cash to spend at merchant location. Now, the driving of this further is going to be driven more by distribution. Driving of this further, so like half of Nigerians are already banked, right? The other half, the driving it is to enable the other half have access to digital banking, because many of them want to open an account, but it's not convenient or the pin is not high enough, and they'll just deal the way they are. So if you make it more ubiquitous and distribution gets better. Second thing is credit. And I like what Pedro said. The traditional banks don't have all the data points that you need to make decisions for these classes of people. And some of these data points, fortunately on our own side, include distribution-aware data points. So what are distribution-aware data points? Like information of where you work or live, together with the knowledge that you can be located physically. Nigeria does not have a credit rating system yet that's ubiquitous and national. So the only way to drive credit is to either price it already, price the risk already, or to have an extra way in which you can drive repercussions. So repercussions typically are usually done for online lenders is they use social shaming. They send SMSs to your colleagues. That's the primary way. But there are other ways in which you can also do social shaming. For example, if you have a knowledge and the customer knows that they have a knowledge of where you work or live, it changes behavior. So driving deeper financial inclusion in Nigeria is going to be improved distribution, as well as driving credit harder by having extra data points that will allow you to reduce the cost of credit, so it is more accessible than many people. So I'll give you an example of a non-sexy example that we do currently. It's not sexy and it needs to be scaled up better. Our agents actually distribute loans through a banking partner, distribute loans to market people. The default rate, and of course, this loan is digitally originated, digitally disbursed, everything. The only difference now is there is a form of offline there. And what's this doing? This is like a product that is preparing for the future where the market woman will have internet and be savvy enough to operate a smartphone and get a loan online. But they are not there yet, probably 5 years away. So, but they are still serviceable. So we have our agents servicing these market people, giving them 30-day loan advance for working capital. And simply because we have extra data points of where they work or live, changes their behavior, helps with recovery, and we currently maintain default rates less than 0.5%. So less than 0.5% is passed as an APL. So where I'm essentially going is, and this is things that are pricing, that affects pricing of credit, which now reduces accessibility for everybody. So to summarize how to drive things deeper in Nigeria is to improve distribution, Nigeria will likely evolve in the direction of Europe, where it's cards and instant payments. In the direction of in the UK, cards and instant payments. And to further drive it is to make credit available in an ubiquitous manner. And to do this, you need extra data points on these guys for you to be able to appraise and provide repercussion to ensure that you don't have too much defaults.
Mm-hmm. Yeah, definitely. So before I ask the next question, I just want to also say to the audience, if you guys have any questions for Pedro or Tosin, please fire them in the Q&A and I'll take a look. And in the last 5 or 10 minutes or so, we'll open up for audience Q&A. So Pedro, I think just in talking about Brazil, we've sort of been backward facing a little bit, just given the sort of context and the relationship of development between Brazil and Nigeria. So I'm curious now to talk forward facing some more. What are you guys thinking about? And, you know, I don't know if the conversation around financial inclusion in Brazil is that financial inclusion has largely been solved, or it's, at a much higher percentage increase. But are you thinking about still, how do you include, the last 5 or 10 or 15% of people? And then just from additional products and services perspective and growth for the bank, what is next after all that you've done thus far?
Sure. I'll just go back one second to the last question and share with Tosin. Like when I mentioned QR code is part of the new system called PIX, that is the instant payments. But it's not only QR code. What the central bank allowed us is allow the customers is that now they can set up a specific key that will be their unique ID for peer-to-peer instant payments. It can be your phone, it can be your social security number, it can be your email, it can be a QR code, or a specific hash. Like, so nobody used this because it's so difficult. There's a long hash, but it could. But I mean, to try to not, so people don't need to think about a QR code if they don't understand what it is, but they can think about their phone, email, whatever it is. So the cultural aspect for people to start to use is reduced now. So it's so simple. Anything can work for you to make payments peer-to-peer or on the merchants. But going back to your question, Justin, I wish we were there yet, and all the Brazilians had like a really good service, like fair price, but it's not. We're far away from that moment. We're not like, I mean, I like to use Poland as a benchmark, where all the banks are really cheap, digital, good experience, like 10 years far away from Brazil. But Brazil, like, besides the fact we have 3 open accounts for each individual in the country, maybe 4. So like 600 million, more than 600 million accounts open for 200 million people in the country. But
wow,
all the fintechs combined today, we have less than 1% of total deposits in the country. Or we have around 2, not even 3% of total credit portfolio. So the game is, we were able to show that we're able to capture their attention, open an account, because it only takes like 3 or 4 minutes. But financial industry is super complex. People need to buy an apartment in a certain point of their life. They need to buy a car. They need to like borrow some money for a specific matter that maybe the fintechs still don't have this product in place yet. So it requires them to go back to the big banks and require a specific product. And then the big banks will try to cross-sell everything, because that's the way banking works, right? You sell one thing, cross-sell everything else. So we're still far away from a moment where the market, where the big banks still like numbers of the big banks between fintechs are equal. I think the next 5 or 10 years will be bringing this potential of 600 million accounts open by fintechs, this potential of monetization, and the profit pool is still with the big banks, but this is definitely going to come over, and fintechs will capture a big chunk of this profitability. Mm-hmm. So it's about keep doing what we're doing faster and better, raising money, bringing new investors, bringing clients, developing new products. So each of the big banks, they have like hundreds, maybe thousands of products. All the fintechs were born like 6-7 years ago. We were able to develop like 5, 10, but like there's still a lot to be done. So that's a little bit about what we're thinking, the way we see the next couple of years.
And just one more question for you. I think another parallel between Brazil and Nigeria is just operationally, very big market, and in many ways different than a lot of your neighbors. You guys are just in Brazil, correct? And is that your intention, just to stay in Brazil, or do you at any point start to look at some neighboring markets across South America and Central America for growth as well?
We are going to Nigeria next month. No, I'm kidding.
Yeah. I mean, why not?
No. I mean, we're only in Brazil now, but we are definitely considering other markets in a year from now, maybe. So we're planning to go public like 18 months to 2 years from now. That's our goal. And before we go public, we intend to go to explore a new market. We still don't know the country. Probably won't be in Latin America. We're probably thinking about a big country, maybe in Asia. We don't know yet where. But the purpose of a company is to make the world a better place, and try to equalize a little bit more financial education, like bring this on like a broader way to the world. There are a lot of different countries in the world where you still have a lot of poor population with poor financial education, as in Brazil, and so we see opportunities to go abroad, definitely.
Mm-hmm. And by the way, Brazil to Nigeria is not crazy. There's a couple of Nigerian growth stage companies. One I'm thinking of that expanded to Brazil, and another that expanded to Mexico. So there, I mean, all this time we've been talking about a lot of parallels. So it's not the craziest thing in the world.
Definitely not.
Yeah. Tosin, so I want to sort of ask the same question of you. I mean, now, especially in light of Monify growing and you guys focusing on payment gateways and moving away from just purely being agency banking, like what are you guys thinking about in regards to growth and opportunities, and maybe even market expansion? You mentioned Egypt earlier. So what does the future look like for TeamApt in the near term?
Yeah. I mean, we're super focused on being the platform that enables people, underserved people, have access to financial services. That's the core, that's the root. And I think this is a fundamental need, because money is fundamental, and there are people that don't have access to it, proper access to it. And I think access to money is payment and some form of credit. So basically, money is always about a way to store it, a way to spend it, a way to grow it, or a way to borrow it. That's what money is always about. And our thesis, our core as a company, is focusing on helping people that currently don't have access to it or poor access to it be able to do those 4 things. That sounds like a blue ocean strategy to me, right? Because they don't have access to it. So similar to what Pedro has said, we're focused on going to those markets where people don't have access to it as much as they should. And the way this works is we have access to it by giving them a wallet that they can use to store it, and probably use to grow it, or probably use to borrow it. but let's also give them platforms that they can use to make payments. What that does is generally also makes you more powerful. So you can imagine us to be becoming like a Square and Cash App now, right? Where we've built the merchant acquiring angle of things. Right now, agents are like merchants, but paying with cash. We also have merchants using it. And now we're building the consumer angle of things already. Nigeria, current home market, has 80, 90 million of such people. We've seen opportunities in Egypt also. Egypt, like I mentioned earlier, it's like many years back. So Egypt can easily go the Brazilian way, right? Because right now, Egypt is just about to launch instant payments, right? And there are merchants all around today, but mostly focused on bill payments, right? And because, yeah, mostly focused on bill payments, and the economy is still largely cash heavy. And you would imagine that's what it is. Because if you don't have a lot of ATMs, which Brazil had, before point of sales, Brazil had quite a good number of ATMs. So if you don't have a lot of ATMs, you don't have instant payments, and you don't have a lot of merchant payment scenarios for cards. The behavior of people will be to store their money in it, because people want to be able to access their money easily. So they'll store it in cash. But now that Egypt is about to launch instant payments, that means that people don't mind storing cash, because that's really, really not convenient. But we'll now start moving more towards electronic methods. And if card is not yet something that's really, really ubiquitous, then QR code will, cards were built in an era where there were no smartphones. If there were smartphones, cards would never have evolved. So they can as well just jump the QR code, similar to what China did, jump the card angle, and simply jump straight to the smartphone-driven angle. And that looks like an exciting opportunity to be present there. Ghana is a much more, quite more matured market. However, opportunities to also exist in helping people to be able to borrow money, especially the payday ones. So basically, we have a couple of markets, mostly in Africa, which are blue ocean for the thesis that we are currently operating in.
Yeah, I know Egypt